and say welcome to everybody. This conversation is centered around how conscious consumerism and investing are fueling the future. I'm Eva Yazhari, general partner of Beyond Capital Ventures, which is a women-led emerging markets impact venture capital firm offering a diversified portfolio of seed and Series A companies in need to have sectors that are led by conscious leaders. There's a lot in there. We are going to unpack some of that in our conversation. I'm also the author of The Good Your Money Can Do. I can't help but hold up my book at conversations like this. Yes, Richard, you have it. And welcome, Richard. It's so great to have you.
Thank you. Thank you. It's a pleasure to be here. Thank you for making the time. And thanks everybody for joining us. Hopefully we'll have some actionable insights today.
Yes, and just a reminder, if you have any questions, use the Q&A function. We'd love to hear from you, and I'll be monitoring that throughout this conversation. But to introduce you, Richard, you're the CEO of Parsec Ventures and hold multiple board positions. You are one of Inc. magazine's fastest growing company CEOs. You have run both public and private companies and advised the White House Business Council. And you chair a philanthropic fund. But what we're kind of talking about today is the fact that you authored a best-selling book, Elevated Economics. And so I want to set the stage a little bit for this discussion. And for you also, who will kind of launch into an explanation of elevated economics and why our listeners and business owners should care about what I would call conscious capitalism and you call elevated economics. And so really, you know, what we're talking about today is there's a force that is conscious consumerism, and we'll unpack what it is, how we got here, and how it will shape the future of business. According to a recent IBM survey, 70% of consumers in the US and Canada prefer companies that emphasize preserving the environment and following ethical practices. We also know that 70% say it's important for brands to take a stand on social and political issues. Interesting. And 57% of consumers are willing to change their purchasing habits to reduce negative environmental impact. Now, there are a number of other stats kind of on the business side. ESG funds actually doubled last year, representing $68 billion of new net money in 2020 from investors. But we also know at the same time that the companies in 90% of the companies in the S&P 500 that went bankrupt between 2005 and 2015 had a low ESG rating. That's kind of one of my favorite ones. So let's dive in. Before maybe launching into some slides and some visuals, I would love, Richard, if you could just kind of lay the land for us here. What would you say really that we're at an inflection point, and how did we get here? So like let's back up a little bit.
Yeah, sure. And thank you for the extensive bio. Appreciate it. An intro. Well, actually, I do have some slides that talk about the background and kind of how we got here,
Sure.
specifically how we got here. So if you want me to launch into those, I'll just share my screen real quick. And let's see if we can get going on that. Oh, it says host disabled participant screen sharing. So if you want to change that setting.
I will make that. Apologies.
No worries.
There you go.
No worries. All right, here we go. So let's do this. And if I can do, let's do this. Okay, so you went through the bio, so that's great. I do think we are at a bit of an inflection point. As you can see just by some of the logos below, some of the folks that are covering this, some of the folks that I've been able to talk to at these various companies. Let me go ahead and skip ahead to a little bit about the book. This is the book that Eva was mentioning before. Some really thoughtful and nice people who I think have a hand in shaping the future of this elevated economy. I've had some nice things to say about it. So that's just a little bit about the book. And then let's get into kind of how we got here. I would say that, well, let me start with a story, right? So I spent a lot of time talking with business leaders and folks in government about how business and society are changing and what leadership will look like into the future. And recently things have been accelerating at a very, very fast pace. So to Eva's point, we are at a bit of an inflection point. And it brought me back to an event last summer. I was rafting the Colorado River, and at the place where the Colorado River and the Roaring Fork River meet, the point at which those two rivers meet, or any two rivers of similar size, is called a confluence. But that term confluence is only used when it's rivers of similar size. And I think that from a societal perspective, we are seeing a confluence of events: climate change, racial injustice, really big, meaty things, right, that the society has to deal with, diversity and inclusion issues, regulation, new accounting standards are another one. And then the investing in consumption habits of the next generation are changing, as Eva mentioned at the top of the hour here. And then also the accessibility of information that everybody has right at their fingertips. So I ran across this article when I was researching the book, and this was on August 19th of 2019. And it said, shareholder value no longer everything, right? I mean, this is a headline in the New York Times. You think, what is this? Like, who are all these left-wing nut job CEOs? What about, Milton Friedman and his theory of shareholder primacy, which basically says, return value to shareholders at all costs, at the cost of the environment, at the cost of employee safety, et cetera. And you're talking about, when you just sort of dive in and think about who are these CEOs, why are they saying this? It's the likes of Jeff Bezos, as you see here, and Mary Barra, and Larry Fink of BlackRock, and Julie Sweet from Accenture, and Brian Moynihan from Bank of America, and Tim Cook from Apple, and Robert Smith of Vista Equity Partners. And there are 133 more CEOs of America's largest companies that agreed with this statement, right? That shareholder value is no longer the top priority in business. And they signed on to this statement, which was the new statement of the purpose of a corporation. So that sounds like a pretty big deal, right? Especially if all these CEOs are signatories to this. So what was this? This was the Business Roundtable, that group that I mentioned, saying that the new statement of the purpose of a corporation is five things. Number one, delivering value to customers. Secondly, investing in our employees. Then dealing fairly and ethically with suppliers. So still no mention of profit, right? Still no mention of returning value to shareholders. Number four was supporting the communities in which we work, including embracing environmental and sustainable practices in all their businesses. And lastly, last, generating long-term value for shareholders, right? Long-term, not short-term. So that was the new statement on the purpose of business, 819 of 19. So that gets us into ESG. So, well, what's ESG? ESG stands for environmental, social, and governance. And ESG investing is this growing category of investment choices, just like it says here, that blend environmental, social, and governance factors into traditional investment evaluations. So a lot of times you'll hear SRI, sustainable investing, and other terms, but I'm focused here on ESG. And ESG really had a moment between sort of, the Business Roundtable statement on 8/19/19 and now. And you look at some of the headlines over, the last few years, and then these are fairly recent. Big, let me go back here. Big, huge moves, right? So the next decade of investing will be defined by ESG. That's Morgan Stanley, right? BlackRock, Larry Fink says investors are shifting to ESG focused firms, and they've staked the future of their firm on that. Sustainable fund assets at 1.2 trillion. I mean, that's huge, huge, huge numbers. So you see these headlines, and you also see other headlines here too. BlackRock, this is 4 weeks ago, they just closed a renewable energy fund, $4.8 billion, huge. And it was oversubscribed, meaning they had more money, more people that wanted to put in money than they had dollars available. You see CEOs taking stands in relation to political issues, right? With these entertainment companies threatening to boycott Georgia and actually boycotting Georgia after their restrictive voting laws. You see huge firms, right? Walmart setting a goal to become a regenerative company, meaning that they will actively protect and restore land and ocean environments. And then you've got, just a couple of weeks ago, the SEC announcing an enforcement task force focused on climate and ESG. So this is a real big change. You've got banks that are pledging net zero financed emissions. So what that means is that they won't lend money to projects that impact greenhouse gas emissions, right? So think drilling in the Arctic, or mining, or coal exploration, et cetera. And some of this stems from banks wanting to align themselves with obviously society at large, but the SDGs, which we'll talk about in a moment. And they're facing shareholder pressure as well. So a couple other headlines real quick, and that's where we'll move on here. So you'll see here that as far as like gender parity goes, female CEOs make up only 7.4% of the Fortune 500. So, I mean, that was in the 2020 Fortune 500 ranking. So 8 companies in the top 100 are run by women. The powers that be on Wall Street and in the federal government and at the state and local level are taking measures to change some of these things. So, for example, California had it was SB 826, which was a bill that said, look, if you're doing business in California, you have to have at least 1 woman on your board in 2020, 2 women on your board by 2022. So that was some of their diversity quotas for corporate boards headquartered in California. Citibank pledging to become anti-racist, right? Review all their internal policies. This NASDAQ rule that will require greater diversity on company boards as well. So right now it's a proposal. It's probably going to become a rule. And then the central bank citing climate change as a sustainability risk for me and a stability risk. That was a first, and that was just a few months ago. Also on the state level, right? So California. Again, Governor Newsom ordered a complete phase out, right, of gas-powered vehicles. So you will not be able to buy an internal combustion engine car in California starting in 2035, a new one, and then called for a ban on fracking as well. And during Climate Week, which is it's September of every year in New York City, China kind of stole the show and vowed to become carbon neutral by 2060. So I mean, the world's largest polluter vowing to become carbon neutral in 40 years. Thankfully, they give themselves a long runway, but that this is a real moment. So to answer Eva's question, it really is, I think, a big watershed moment. So a couple more slides, and we'll turn it back to Eva here real quick. The percentage of U.S. domiciled assets under management using sustainable investing strategies is now at $17 trillion, right? This was 12 trillion in 2018. So it's up by 42% in that 2-year period. So 1 in every $3 of the total US AUM, assets under management, are invested using a sustainable investing strategy. Over the next 5 years, that's going to get to 50%. I mean, this is just a huge, huge sea change. So as far as the SDGs go, most of you might know about the SDGs. This is a framework that was adopted by the United Nations. And as you can see, there's 17 numbered and color-coded goals, which basically serve as an urgent call to action by all countries. And they recognize that ending poverty and other deprivations have to go hand in hand with strategies that improve health and education and reduce inequality, and also spur economic growth, all while tackling climate change and working to preserve oceans and forests across the world. So a lot of firms will now try and map their goals, their ESG goals, to the SDGs, the Sustainable Development Goals. So you can see that they're numbered and what the various numbers are and what they correspond to. So a lot of folks will say, hey, I don't want to sacrifice financial return if I choose to invest with an ESG mandate. Well, the good news is that you don't have to trade financial return in exchange for investing in ESG related companies. There's lots and lots of studies that prove it. I won't read them all here, but I'll make these slides available, by the way, to anybody who wants them after the call. So there's lots of data and information that show that that's actually not the case. And in fact, that sustainable firms actually outperform less sustainable firms as well. All right, so the second last thing, I think, the amount of money that's going to transfer between generations over the next 2 decades is massive. So $68 trillion, trillion with a T, is going to transfer from baby boomers and older generations to millennials and Gen Z. And you see here what the percentages associated with that mean. So 80% or more of the people who are going to inherit that wealth are going to be looking for a new financial advisor after inheriting their parents' wealth. I mean, that is just huge. And they invest completely differently and spend, of course, completely differently based on a lot of ESG criteria than their parents and grandparents do. And so if you think about this massive, massive, massive change that's coming, you think about ways you can get in front of it, ways you can align yourself with it. And I think lastly, we think about, well, what can we do? What can I do now? And I've jotted down a few things. Eva wrote a whole book about it. But sort of the highlights from my book and my research are the things you can do, right? Vote with your dollars, right? Buy locally, buy from companies that align with your values. You have to know what your values are. You have to do that assessment first. Shun companies that don't align with your values. Put your money where your mouth is, right? Decide how your investments align with your values. And I think Eva's book is a fantastic blueprint of how to think about that and how to do that. Choose who you bank with. Where you bank matters and has consequences. So think about that. If you have a position of leadership in a company, or you aspire to be in a leadership position in a company, be that value change agent in your organization. You know what's coming. Maybe you've read my book, maybe you've read Eva's book, maybe you're going to read them both, or maybe you're just going to sit through this webinar and think, you know what, I need to help make these changes. But you can be a valuable asset to your company to help it position itself to win in this elevated economy. And then, of course, speak up, make your voice heard at your workplace, on social media, write a letter to the editor, to your congressperson, support candidates and causes that align with your values, and run for office if you can have the time and have the inclination. And also read The Good Your Money Can Do. Read Eva's book, because it's fantastic. So that's it for me. I wanted to say thank you to everybody for sitting through that. And we're going to have a Q&A. Eva's going to talk to us about a lot of things that are in her book right now. If anybody wants the slides, feel free. I'm happy to send them to you. This is where you can get in contact with me. But I'll stop talking. I have a tendency to run on. But I hope that was helpful. And Eva, I'll turn it back to you.
Incredible. I mean, laying out the great wealth transfer in itself is such an asset for investors and for business owners, because prior to actually learning about you and reading your book, I had no idea about that number. Mm-hmm. Of course, everybody spoke about the millennials inheriting money or making their own money, but the inheritance piece and kind of the wealth transfer of such a large sum, I think really speaks to the dynamic shift. And I really hope it's an area where we as humans cannot be short-term in our thinking and can be a little bit more proactive about how that's coming, and change needs to happen now. So I really applaud you for bringing that forward for business owners, for investors as well. And I do see, I think probably a large percentage of those that are listening right now are YPOers. And I know that that was a target audience for you.
So having been in YPO for 7 years, when I was writing the book and doing the research for the book and talking to all these fancy Ivy League professors for the research of the book, that was my audience. My audience was squarely, business leaders or people who, like I mentioned before, aspire to be in a leadership position in their businesses, because I really believe that business can be a force for good. These are changes that can be made. They can help your business. They can help you become more sustainable. They can help you attract and retain talent, which lowers your cost. There's a whole host of things that can be done on the business front. But I know, Eva, you talk a lot about what you can do personally, and I think that's so actionable and so meaningful. So I'd love to hear a little bit more about that.
Yeah. Before we go there, I actually do have one question for you, and it is, with the great wealth transfer and diversity, equity, and inclusion efforts in companies, do you see a snowball effect? Do you see when millennials become wealth holders and spend differently, coupled with some of the, whether it's based on quotas or just, desire to have more diverse teams, do you see then even more impact happening in the next coming decades?
Absolutely. Absolutely. And I think that here's a little anecdote about sort of how I've seen that play out in real time. So I was back on my business school campus for a reunion a few years ago. And there's a great professor there named Vikram Gandhi, and he was taking us through ESG and that's sort of all the things we've been talking about. And there were a lot of, it was a mixed year reunion. So there were a lot of, gray haired white guys in the room, guys that kind of look like me with a little bit more gray hair in the room. And they were talking about the endowment, the Harvard endowment, and there was huge pressure for the endowment to divest from its fossil fuel investments. Right. And they were debating it. Anyway, one of these gentlemen had brought his daughter to class, and she was probably in her early 20s. And I was hoping she would say something. I was hoping she would say something, because we were just in this echo chamber of old white guys, right? And the Vikram called on her and said, well, what do you think about this discussion? And she says, this isn't even how we think. This isn't even an issue. It's not should we or shouldn't we. It's why hasn't it been done already? Right. And that just crystallized for me so much of the way that we should be thinking about how the next generation is already thinking about all this stuff. They're not going to stand for the world's forests burning and fossil fuels being emitted into the atmosphere. They're not going to stand for any of this stuff. And they are going to be the ones, as we saw after this, the great wealth migration, with all the purchasing power and all the investing power, and they're all looking for new investment advisors that align with their values. I mean, values-based investing, it's not an if, it's a when. It's not really even a when, because it's happening right now. So yeah, great question. But if we're not thinking about this, we're really behind the eight ball.
Yeah, that gives me hope as well. And so I think then let's talk about the individual, and I'll give some tips and tools from the Good Your Money Can Do, because my focus was really sitting at maybe the equivalent dinner table of your business school reunion for over a decade, and being told that, oh, you can't do good. You can't, you can't use your economic transactions to express your values. That's for you, Eva. That's not for everybody else. And before I just get into this, I do want to point out, your book is tree neutral, and you have made a lot of micro decisions along the way to truly walk the talk. So that's what we're going to give now. We're going to turn the conversation to those who are listening, how you can do this in your own lives. But if you do have questions, I will monitor the questions. And so please, feel free to ask questions in the Q&A along the way, and we'll get started in a second. I actually am going to put my disclosure in the chat so I don't have to read it to you all about how this is not investment advice. So here we go.
And my fund is closed, so I don't need to put the same thing. I appreciate you putting that in there.
All right. So here's the deal. I mean, for me, I really am fueled by gratitude as a human being. I have been in many situations in my life that I write about in my book. One of them going to a New York City public school where my privilege was very, very clear to me. And I really believe that we're lucky enough to live in a time where we can have a material impact on a social or environmental problem with little sacrifice in our own lives. And the reason I stepped down this path was actually reading Peter Singer's work. He's a Princeton moral philosopher who wrote a book called The Life You Can Save. And the main anecdote story in that book is, if you were walking by a lake and there were a child who's drowning and you were wearing, in my case, Manolo Blahniks, would you jump in to save that child? And the answer is absolutely yes. But when I looked around my life, I noticed that there were a lot of decisions that I could have been making that might have been a little bit different to have an impact that went beyond just myself and my own life. So today, I'll just unpack a little bit of some of the concepts in the book. The first one is the power of conscious investing and impact investing, and really the case for conscious investing. So to define conscious investing, it is essentially using all your tools. I start with money. I worked on Wall Street. I worked in the hedge fund space. I can speak that language of money extremely well. It's something I'm trying to also move away from and really connect with wealth as more than money. But the term I use, conscious investing, defines investing as your portfolio, your IRA, your 401k, your bank, as you said, Richard, your consumer choices, and all other areas of your life. I think taking a step back for me means looking at what the traditional system has looked like. It's either you spend, save, or you give, or it's traditional finance versus philanthropy. And $400 billion of philanthropy in the US given every single year is not going to solve our problems. It's definitely not going to solve climate change. So there are some limits to this existing paradigm. The other concept that I think is really key in thinking about conscious investing is shareholders being the top of, the heap, or are we thinking more about stakeholders? And that's what you described, Richard, in your presentation of the Business Roundtable decision to kind of redefine the purpose of a company. It was thinking about all stakeholders, the community, the employees, the environment as stakeholders in a company, in addition to the shareholders, and putting them all on equal footing. And I think COVID-19 has really revealed opportunities for us all to rethink who the stakeholders in our lives are. I think the best example of that is gig economy workers being redefined as essential, and really kind of putting them on a level where they probably have more value than they ever have had in the past. So really, what conscious and impact investing is just an expanded form of wealth consciousness. And I'll talk a little bit more about what wealth consciousness is, but major disclaimer here to say that you don't have to be a martyr and give up returns. 85% of purpose-driven companies show positive top-line growth. And if a company is not purpose-driven, that's about almost 58%. And that means that the returns really do sit with businesses that have greater integration of ESG, environmental, social, and governance qualities. These are some of my two favorite people. Funny enough, I'm talking to Ajita after this webinar, but they really express two qualities I think are really important when we think about conscious investing. The first is how our money can spark joy. Ajita runs an e-commerce business in India, in rural India. She's focused on getting renewable products as well as fast-moving consumer goods and consumer durables to very rural areas. She started the business in 2013, and Beyond Capital is one of her seed funders. She's grown the company to be quite large, but her tagline for the business is Saral Jivan. And what that means is easy life. And I think when I think about conscious investing, it is also about finding joy and finding ease in all of my resources. I don't want to be fighting against a system where the pie is finite. It's a race to the bottom. It's dog eat dog, however you want to describe it. I think we all really do want to live in a world that is inclusive and where our communities around us are taken care of, because even if it has to be thinking about it from an enlightened self-interest perspective, where you're thinking about what's in it for you, it is better for you to live in a thriving community and in a thriving world. Ian Walker is the definition of living the triple bottom line philosophy in and out of his company. He's a YPOer that runs Left Coast Naturals, also known as Hippie Snacks. And he can tell you where every single ingredient in his products has come from, as well as what the carbon footprint is. But it doesn't stop there. He also can tell you how many of his employees are riding bikes to work, how many of them are eating organic, because he has an incentive program in his company built around those core values. And I think that he just, to me, really stands out as a CEO who's also been shown that this type of work is not new. He's been doing this for 3 decades, but he really, really walks the talk. Both of them are interviewed on my podcast, where I've interviewed over 60 purpose-driven leaders over the past 2 years. So the reality is there's much more to conscious investing than just using all your money to express your values. As I mentioned previously, ESG informed decisions are better decisions, and companies that have greater levels of diversity make better decisions. I also pointed that out in the intro with how many companies in the S&P that didn't have an ESG focus went bankrupt in a 10-year time horizon. And Richard, the point about the great wealth transfer, I think, reframes the conversation about money. So I agree, it's going into the hands of millennials, but there is a statistic very similar to yours that women, when they inherit money, they change their advisor 80% of the time. And it's very similar because the language around investing for females and BIPOC investors is it's not particularly friendly. It's definitely my type of language. I'm a mathematician. I love the alpha, the beta, and all the Greeks and everything we spoke in the hedge fund industry, but it doesn't make investing inclusive. And so what I love about conscious investing is you can talk about the impact that your money is having, not just the financial return. And the same goes for children and micro investors who have typically, especially micro investors, been told that investing is not really for them because they don't have enough money. There are also some more nuanced qualities of thinking about how much is really enough for you, and detoxing your money. We live in a world where, especially in America, you can detox your household cleaning products. You can detox your fashion now. You can detox of course, your food. You can buy organic food, but can you really detox your money? And the answer is yes. It's just, we don't know how yet. And there are a lot of options out there. So really, conscious investing is about asking more of yourself. It's not only asking more of your money or the system. So this is now going to be about you. How do you define your values? How do you line them up? And really defining your values is the starting point. So for me, I write a lot in my book about some experiences I've had with why I have specific values or how I got to develop them. I think taking a look at your family, your life experiences, maybe where you're giving philanthropically, what you wake up kind of feeling easeful about, and wanting to approach as a problem are good starting points. Because as Jacqueline Novogratz said to me yesterday, this is not easy work, but if you're passionate about it and you're passionate about change, it can be very effective. And I have it gives me a lot of gratitude. There's also something called the values game that a well-known advisor that I know called Jennifer Kenning uses, where she literally puts kind of chips on a board and 9 different issue areas for her clients and says, put your weightings down. What do you care about? Homelessness? Do you care about the environment? Do you care about gender equality? And it allows you to kind of see all of the areas and really prioritize your weightings in terms of what you care about. Where I landed was gender equality, racial equity, and the climate emergency. But I skew a little bit to millennial, so that wouldn't surprise you, Richard, I'm sure, in your research on the Great Wealth Transfer. It's not easy, but also looking at your implicit biases, I think, is extremely important. And if you do discover that you have a particular bias, working on it, and using all your economic transactions as a tool. So some other ways to have values in action are to think about where you can offer your whole energy. What are the needs of a community that gives a lot to you? Maybe it's a school, maybe it's just your neighborhood association, and maybe it's much more than that. You should also think about unintended consequences or unexpected ways that your kind of focus area might benefit or not benefit somebody. And then think about your position in the movement or your personal scope of influence. Everybody has a different skill in the world. I think some people are great networkers, others are amazing communicators, others are great connectors, others are great ideators. Like, everybody has a different skill. And I think it's really down to us to figure out how we can contribute the most and ultimately leave a mark on the world or leave a legacy on the world. So I want to touch a little bit on wealth consciousness, because I know it's not a term that everybody thinks about all day long, but it is really important to take a step back. And essentially what wealth consciousness is to know what you own. It's to think about, did I make that book tree neutral because I really care about the environment? Or, does my portfolio line up with my values? And in the introduction of my book, I tell a story of how I couldn't get Philip Morris out of my portfolio when I was living in Switzerland and had a Swiss asset manager and client advisor who wouldn't listen to me. And that felt pretty bad. And I think that was truly the definition of wealth consciousness, but using it as a catalyst for change. And the second element of wealth consciousness is truly knowing that no investment is neutral, is that there will always be a positive or negative impact of everything we do, buy, invest in, and even say and put on social media. And so, living that way it's a little tough, because you walk around the world thinking that everything is either good or bad. But ultimately, I think when you make the good decisions, you can feel good about it, and you can even go deeper and know the depth of your impact. Think about how you can actually measure it, find the right resources for you, whether they're a financial advisor or a platform online that offers an ESG integration to your portfolio, or even a company that sells products that truly are in line with your values, like Left Coast Naturals. And think again about how you can use all your tools to contribute beyond yourself, because we do have power. I think we have more power than we really are told and thought and kind of raised to believe that we have in aligning with our values. And we also have a lot of options. And the last thing I'll just say is, if this is all, gobbledygook to you, and you think this is, the yoga teacher part of me speaking, The reality of this is all proven in research. So behaviors such as giving and assistance are directly correlated to happiness. The greedier and stingier you become, the less likely you are to exhibit the traits and behaviors that lead to happiness. And there you go, Harvard Business Review. I think that's probably what everybody needs to get on board here. Finally, I would like to share another story of being pitched The Big Short, the subprime mortgage trade that tipped off the last financial crisis. We were called, I worked in the hedge fund industry, we were called up to the 30th floor of an office building. We were told, we've got a really great presentation for you, something that's gonna make everybody a ton of money. And the pitch was so unbelievable that my entire investment team stared at each other in the elevator on the way down and said, that guy is Dr. Doom. And we actually didn't invest in that fund, the dedicated fund. We were already invested in one of the managers' other strategies that had an allocation, which arguably I think did some good by the pension money that we had when the market dropped, 40%. There was a little bit of cushion, but in reality, that trade did not feel like something that was a good decision and a wealth conscious decision to make, because it was profit on the backs of innocent homeowners who were being sold mortgages that they couldn't afford. So sometimes a decision not to do something can also be impactful, which is important when you think about maybe, you can't move your money right away, or maybe your 401k, you're not in a position, your company doesn't offer any options. Think about other ways and maybe some things that you are not doing that can have a strong impact. Other top tips for investing with awareness are thinking about more passive ESG strategies. Typically ESG is just screening out. It's just do no harm. But if you want to have a more active approach and be more proactive about perhaps female leaders, or even racial equity or racial equality in leadership of companies, now there's no better time than now. There are many funds out there. My whole 401k is allocated in a way that I wake up every single day feeling proud of. And there are many, many ways to do this. It's just a matter of finding the right options and thinking about ways and filters to look for those options. One of those filters is B corporations. And we like to say, and I like to say, it's letting the certification do the work for you. B corporations are businesses that are certified for focus on people, planet, and profit. They're not only B corporation, foods or body care products. There are also B corporation banks and financial planners and technology companies. And you could pretty much look at your economic transactions and look at your consumer choices and line them up as much as possible with B corporations. It's what my friend Rohan Oza calls the flip. So you pick up a product and then you turn it over, and there's a lot of information on there for you to ask your questions. And typically, if you're lucky, there's like a little B, and that B enables you, I think, to make a sound decision where, we're all busy. You don't have to do all the work. You mentioned this, Richard. Where does your money sleep at night? Are you banking with a bank that's on the climate banking list, the banking on climate list, and funding fossil fuels? Or are you banking with a bank that has a more kind of community or local oriented strategy for lending to small businesses? So ultimately, this is all about asking questions. I have a little section, shouldn't say little, it's actually a longer section. It was hard to cut down in the book on due diligence, what it is, and how you can line up your due diligence with investing with awareness. But you can't do this alone. And you have to find a high vibe tribe, whether it's friends or colleagues or peer networks or a group of YPOers, which is how Richard and I met, that care about this sort of thing. And it's important to establish trust with these individuals and to commit to learning together and to supporting others in your community, because ultimately prioritizing the vision is critical for having more products and services be developed that are ESG oriented and are lining up with values that go beyond just shareholder primacy. So, and lastly, you mentioned this, Richard, but being an employee and being a discerning consumer comes with a ton of power and even pressure. And I think it's just important to say no when we don't feel comfortable with how companies are acting. Another author that I refer to in my book, Tatiana Schlossberg, wrote a book called Inconspicuous Consumption, the environmental impact you don't know you have. And she says, as a consumer, we should not be shamed, but we should ask more from the companies that we are purchasing from. I want to be hopeful that I'm a glass half full kind of person, but I think the key word here is not hope, it's intention. Everything we do has an impact. And so for all who are listening, that is really the main message. And I hope you had some things that you could take away from it. Here's how you can get in touch with me. And I will take a look and see if we have any questions. But Richard, also happy to take any questions from you as well.
Yeah, first of all, that was great. And thank you for all the actionable insights there. I think the story, I mentioned this to you on the phone a couple of weeks ago, the story that you shared in the very beginning of the book about the Swiss banker was just so powerful, right? About really ignoring your values, what you wanted your money to do for you. It's sort of the good you wanted your money to do for you. And I think that hopefully the world has evolved a little bit since then. And also that your presentation can give people a little bit more confidence when they talk to somebody. And also, financial advisors are a dime a dozen, right? If you don't like the one you're with,
yes.
go get a new one. Right? Move your money. And I just wanted to note for the audience too, that I think that even I probably manage our own money because that's our business. But if you do talk to an advisor, this doesn't have to be rocket science. It doesn't have to be hard. There are, just so you all know, more than 2,700 ESG funds to choose from. If your money is at a big firm like BlackRock, they just bought a company called Aperio, and Aperio does the negative screening that Eva was talking about a little while ago. And basically they'll say, okay, talk to us about your values. You say, look, I don't want to be investing in, tobacco companies or, folks that are dumping fossil fuels into the and CFCs into the atmosphere. And they can screen out all the public companies that do that as well. And there's, you should have exposure to public companies, but also private companies, right? Or what they call alts, which is short for alternatives. And if you look at the alts, there are some great alternative investments, maybe private investments, funds, et cetera, that you can work with as well. And whereas the public companies have various rating agencies for ESG issues. So you'll see like Sustainalytics or MSCI or Bloomberg or RepRisk or a bunch of others. The alts also have folks who can verify the impact that they're having. So there's impact assessment, Tideline, Proof of Impact, which is a fantastic company that I actually advise, so full disclosure there. And they verify the impact that private companies have too. So you can have public companies that are doing well, and that's verifiable, and you can have private companies in your investment portfolio that are doing well as well, and that are verified. You can also look at some public B Corps too. So a lot of people think B Corps are, specifically not public companies, but there's Laureate Education, there's Natura, Sundial, which is Unilever, Ben & Jerry's, New Chapter, a whole bunch of them. So just something else to consider.
Absolutely. And I would say that, and I'm only picking up on something you said earlier, but I have never had, I've only had a female advisor after that experience.
Yeah.
Because there was a little bit of gender bias around wealth coming through in that comment and the lack of response to my question. But funny enough, I just want to say, I don't manage my own capital. I think there are people who do it better. It's a strategy of, I guess, how I was able to write a book was I kind of have a great advisor who I can trust and know that she's got my back. I write about her 3 times in the book. Her name is Jennifer Kenning. Regarding independent wealth advisors are leading the charge of ESG in the US. And so they are actually pacing ahead of the large banks in the offerings that they are providing. And you're right, there are many advisors out there. So absolutely, it's called like the law of voting with your feet or something like that. If you don't like the options that you're being given, move. And that's very acceptable.
Yeah.
I don't have any questions here. We have a shy group. I think I would just then maybe turn it over to you for any closing remarks.
Sure. Well, I was going to ask you something else
Yeah.
about Evas too, if you want to sort of tell
Sure.
people a little bit about them, because I think they're fantastic.
Yeah. So Sally Krawcheck, who actually got I don't know if it was an honorary degree or some sort of degree at Columbia Business School when I graduated from Barnard. So she's been a female icon in my head, for a Wall Street veteran for many, many years. She started Ellevest, I would say a number of years ago, probably five or 6 years ago now. And the goal was to speak to women differently about money and allow for a safe place for women to have their money be managed. Ellevest has a partnership with Vanguard, and we've gotten to know the team as well. And we know that they are very actively looking to add more impact options. Currently, it's a toggle on your portfolio. So you can toggle, yes, I want more impact, or I just want the traditional Ellevest portfolio, which is pro female leaders, pro female consumers. And so they've actually taken their own filters and applied them to ETFs and mutual funds, and been able to screen out for companies that are not, I guess, working in favor of both genders, and in particular of women. But it's an incredible concept. They now have over $1 billion under management. You can open an account with $50, so it is quite accessible. And they now are starting a private wealth management division as well, for larger clients. But overall, a really, really good starting place, which I recommend in the book for women who are, and all investors who are looking to have kind of a more aligned place to put their capital.
Yeah, that's great. Thank you for mentioning that. I also want to mention a few specifics as well, because I think a lot of times folks will get off calls like this and think, oh, that was really general. That was great information. No, but like still, it's kind of, where do I start? Just as an example of the bond side of a portfolio. So typically you have stocks and bonds. You can buy green bonds, right? So these are bonds that help the natural environment. There's a bond called the Working Forest Fund, and it's a really unique security. It was brought to the investment grade bond market, and specifically it was brought to a market to address climate change and conservation. And it's done through forest conservation in the United States. So they went out with Goldman Sachs, raised $150 million a couple of years ago, and the total value of their projects now is $245 million. So they partner with forestry companies to log land sustainably while protecting, I can't remember the number of acres, but it's something just absolutely incredible. And there's also a bunch of SDG related ETFs. Remember SDGs, the Sustainable Development Goals. The SDG ETFs, there's impact shares. There's a company called Serenity Shares. It has SSI Impact Index. There's iShares. Probably a lot of people are familiar with iShares. They have a MSCI, a Global Impact ETF. So there are some specifics out there. You can kind of get lost in the shuffle, but there are a couple of good tools. If anybody wants to ping me, I can send you to some sites where you can filter by areas of your interest and see whether it's a ESG fund. I know you kind of get just a little bit alphabet soup here: ESG funds or SDG funds or B Corps, right? But there are a lot of funds and bonds, like I mentioned, that are places where you can put your money that will allow it to do that good. And there are a lot of rankings as well. There's a company called Just Capital, and they have the rankings for the most sustainable companies. And there's lots of reputable lists of the best ESG companies. The Journal puts them out, Barron's, Morningstar, et cetera. And they all have these lists. The one about Just Capital, it's an interesting list because it's based on polling of the American public. So it's subjective, but a very interesting site. And there's some great toggles back and forth, like Eva was mentioning on the Ellevest portfolio site. You can do the same thing on Just Capital and kind of look at different categories of interest that matter to you. So just a couple of specifics.
Absolutely, and I think you're right. I think the tangible take home pieces of information are most important. And oh, okay, I thought we had a question. So it's more of a comment. Thank you, Evan. But I actually want to just flip before we wrap up to tell everybody that we will have a Q&A with you on the Conscious Investor. And The Conscious Investor is an online magazine that I started also in 2019, with the goal of speaking to kind of a wider audience and providing this information in a more tangible way. There, we also have a guide to, for example, investing with a racial equity lens. We'll be continuing along guides. We also unpack that alphabet soup as well. And we have a guide to the SDGs. We have a guide to what ESG is, same with B corporations. And so we'll have a piece with you coming in the next couple of weeks so everybody can deep dive and we can get it out to a larger audience. We do have one question, and I'll pose it to you, Richard, and then I'll take it afterwards and add on. Do you see any common pitfalls for anybody who's getting involved in the space from the beginning, whether it's conscious consumers or investors? And have you, any kind of mistakes that you would recommend avoiding?
Sure. So I think unintended tax consequences they come to mind first. So if you get excited about ESG investing, which you should, it can be very tempting to sell what you have and buy stuff that more aligns with your values. There is that act alone can have some pretty big tax implications. So I would say just think about it and find a way. Talk to somebody if you have an advisor. Talk to your advisor, but find a way to do it in the most tax advantage way possible, because there can be some pretty big unintended consequences. But also, don't be afraid to start. Right. So a journey of 1,000 miles starts with the first step. So do a little bit of research, read Eva's book, but don't be that person who does all the research and thinks and hopes and wants but doesn't act. Right. Do it.
Yeah.
It's okay. You're going to be okay. Right. Do a little bit of this research. Lean on folks like Eva and myself. And again, I'm happy to talk with people offline, not for financial advice specifically, but about ways to get started. But the tax thing comes to mind first. What about you, Eva? What do you think as far as pitfall?
It's a great point. I don't believe in selling everything and taking a loss and then becoming a conscious investor, because that's not very wealth conscious. But I agree. Don't let perfect be the enemy of good. And as Maya Angelou says, do the best you can until you know better. And when you know better, do better. And this is an iterative process. And it certainly has been for me. I mean, one of my first impact investments was an angel investment that went bankrupt. It happens. But now I have, a more diversified view of what my portfolio should look like, which is actually a good thing. And the next question that just came in is, there's often a disconnect between next gen and old gen in regards to making capital allocation decisions based on impact. And so the person, anonymous attendee, says, I somehow assume it's a she, have some next gen attendees on the call. We have some next gen attendees on the call. How do we structure productive conversation to the older generation to motivate and incentivize the transition to a purposeful economy? For me, it's number one, there is not a trade-off. Again, that one investment that I made was a one investment. It was an angel investment, and it was 12 years ago. In what I would call kind of a 1.0 social enterprise, and quite a pioneering enterprise, but definitely a version 1.0. But I think more shifting the conversation to, there need not be a trade-off. What kind of legacy and mark do you want to leave? Legacy do you want to leave? How can this help maybe the older generation who's been more philanthropists or maybe advocates or activists extend out that work and even do more with their investing? I'm the type that likes to kill two birds with one stone, and I think that impact and conscious investing absolutely fit into that paradigm. But the last point is, you don't just have to have impact in a bucket. You can have it across your whole portfolio. And if you can have it across your whole portfolio, it's not risky. It's not anything different. It's just another lens, which is actually a risk factor, especially if you're speaking to somebody of the older generation that has an investment background. They're always thinking about risk. But I don't think there's any leader out there that wouldn't acknowledge that environmental risk is real, and there are many other risks to businesses. So I packed in a lot into my response. Feel free to add on.
Yeah, so I would say, talk to them in the language that they understand. Sustainable companies are better long-term performers. And if you can again, talk through some of the financial benefits. There's a great company called Ecolab, and what they do is they'll go into a company and they'll say, okay, let's save you money by transitioning to solar, right, for your energy use, to renewables in general. Let's cut down on your hot water usage. Let's look at your wastewater in your facility. Let's electrify your fleet, right? So, I mean, those are all cost-saving measures. Yes, they help the environment as well, and they're green in their outputs, but those are all cost-saving measures. So if somebody's not buying the tree hugger narrative, as they might see it, that we're putting forth, talk to them in the language that they'll understand. It's better for them. It makes them more money. It saves them more money. It can make their investments more sustainable, not in the green, sustainable sense, but they can buffer, market beta better over the long term. So that's yet another. That's another, I would say, way to talk to folks who are hesitant or resistant. Like, drop the whole green angle and just talk to them about money, because that's probably what they're going to respond to.
That's the language that they speak, because that's the language we've been taught to speak over the past decades and past 3 decades of capitalism, maybe even 4. One of the people that I refer to in my book is Brene Brown, because she says the heart has been taken out of leadership. It was actually in leadership previously, and she's gone through research and materials, but the heart definitely has been taken out of capitalism. And I think this conversation centers on how to get it back into capitalism.
Unintended as well, right? It's yeah. So the dean of Harvard Business School in 1918 said that the purpose of business is to make a decent profit decently, right? So like you say, it was there. The heart and the intent and the ethical component was there, and then has been, as Brene Brown said, taken out, ripped out over time. So that was not the original intention. And I would say that 80-90% of people would agree. But the way that we have come to talk about business and finance, heck, even marketing, right? We're taught terms like you go out and you capture value, right? And we use these military terms. If you're a business and you have an advertising, it's an advertising campaign, right? And so the way that we talk about business is in these sort of military terms, and it's us versus them. So it presents and perpetuates this false narrative that is this sort of zero-sum game. So we need to get away from that. We are getting away from that. I think business schools are changing the way they teach, consumers are changing the way that they buy, and investors are changing the way that they invest. And it's all for good. I'm an optimist, just like you.
That was so well put. Thank you, Richard. I do want to ask you one last question to check out of this conversation, which is, what is giving you hope right now?
Oh man, well, the very first thing that popped in my head is my kids. So they are 7 and 12, and they, again, it was like that story that I talked about before. They don't see the world the same way that we do. They just behave and think differently. They're wired differently. So the future gives me hope. The future generations give me an absolute ton of hope. There are so many people trying to do good. And we see from all the research that we just went through today, the sea change is happening, the trend lines, if you extrapolate them to their natural conclusion, it's here. And that gives me hope. And the next generations are going to take that forward.
Yeah, that's great. And what really gave me hope today was this conversation and being able to connect with you and your body of work, which everybody should go out and buy, Elevated Economics. And I hope you also take a look and buy my book as well. But they are cousin books, and they are here for you as business leaders and as people. And I'm grateful that we got to have this time together, Richard. Thank you so much for the discussion. And thanks so much for everything you've done in getting this message out there.
Thank you for having me. I really appreciate it.
Bye, everyone.